Hello everyone and welcome to Day Trader S&P 500. Today is Monday, March the 6th, 2023. This is Dale Woodson, editor of Woodson Wave Report. We want to get you guys caught up with what our monthly subscribers and annual subscribers have been seeing the last few days. This is Friday's pre-market open. The main thing here is we put out upside and downside triggers and targets. I know there's a lot of information on this chart, but the main thing is over here on the right in the red and in the black. A move above 40.2475 in the red triggers these targets here. There's the 500, 618, 786 and make or break, although technically it should stay below the wave 1 low unless it's a diagonal triangle. And then the bottom side below targets, a move below 39.25 triggered these downside targets, and I've got those in upside there. Okay, purpose of this report was to give the upside and downside trigger points and targets. So a move above 40.2475 brought these targets into play, and a move below 39.25 brought these targets into play. And as we all know by now, the move up has occurred. So without further ado, I want to get you guys to the March monthly report. Okay, for our annual subscribers, we do one report a month. And while I'm on it, I want to show you guys I've activated that 25% discount for 25 years. So you guys go into register, you come here, fill out all your information there. Any one of these subscription services, the monthly, the NASDAQ futures, $89 a month, the annual, $377 a year, video on demand, $55. You can see what they are there. You can type in 25 here and hit apply, and 25% will be taken off immediately. Then you can order. So wanted to bring that back for you guys. I had a few people asking about that, so just wanted to bring that back for a short time, and hopefully you guys can take advantage of the 25% discount. Okay, the monthly report is sent to annual subscribers. Okay, so there's our wave table there. Thought we'd just go through this way. It's a little bit easier. We're looking at a weekly chart of the S&P cash, okay, from the all-time high. And what's most interesting is at the bottom of this chart, you can see that the internal waves and the bigger waves are all moving in near perfect Fibonacci relationship in terms of time, not to mention price. Okay, we don't have all the direct hits displayed here. There's many of them. It's gotten so many that we don't have room on the charts. When I put them on, it takes up all the room. But you can see here at the end, we had this ABC up here, and that's off a little bit. My apologies. That A should be over here, the B where the A is, and the C where the B is. But the larger wave C here would be a Fibonacci 34 weeks on the week of April 10th, and that happens to be our next turn date. So we'll see. As long as the most important high is this 43.25. As long as that high holds, then this B wave is valid, and we're doing a 1 down, a 2 up, 3, 4, and 5. To a lesser degree, the 41.95 has to hold for the bears. If it doesn't, then this 2 could go higher, but this 2 cannot go above the 43.25 high. Then it's wrong. We always ask ourselves, when trading and when doing charts, where is it wrong? All right, that's where 2 is wrong if it goes above 41.95. That's where B is wrong if it goes above 43.25. Unless or until it does, then we're in a 1 down, a 2 up, and a 3 down. And this is, we can see this on a smaller degree. This is a weekly bar chart. Okay, so let's drill that down a little bit further. There's our C wave targets, which I think I have up here. Yeah, C equals A at 31.42. Okay, and then we can go from the 816 high here. And there's that 1 down, and that A up, B down, and C up to the 41.95. There's our C targets, C of the larger degree or intermediate degree trend with the parentheses. Okay, and the alternate count is still in play, which shows in blue an A up, a B down, and a C up, and there are those targets. Even if the alternate count kicked in, it's still a bear market from the all-time high, and that would just be a B, or what is it, close to a second wave, if you will. But what would eliminate, okay, so where is this wrong? The alternate count is wrong when the low goes below this B wave low here of 37.64 on December 22nd. So we're in between right here. There's the make or break again for wave B, okay, and there's a make or break for wave 2. If it breaks that wave 2, it's not that significant. If it breaks the 43.25, it's a little more significant as far as the bears are concerned, okay? And the bulls are hoping for a higher wave B, C to a lesser degree of trend. A higher B would be up here. Need a break of 41.95 and 43.25 for the bull case. Okay, moving on. Here we go. We have an hourly. Is this hourly? Yeah, from that 2-2 high back here. We're drilling it down. There's that 2-2 high right there, and that was on a daily chart. We went from weekly to daily, and here is hourly. Here you can see we've got a 1 down, a 2 up, and a 3 down with our 4 wave targets up here. Ideally, that stays below the wave 1 low, and that's right near the 618 retracement. That might be all we have. Well, let's get into it. What the heck? Here's the NASDAQ. This is what we put out to our annual subscribers. Done once a month, and interim reports as market conditions warrant. These are the turn dates with the red checks for the NASDAQ. Excuse me, a daily bar. There's the fib time spiral. Next one's not until July 5th on this one. Okay, but this was the all-time high back in November. In the NASDAQ, you can see basically the same thing. An A down in parentheses, a B up on August 16th, then a 1 down into the October low, and a 2 up into the February 2nd high. Okay, same make or breaks here. This 2 is the high on 2-2. Wave 2 on 2-2, and then the larger wave 2 on the B wave high. I'm sorry, the B make or break is that 816 high, 13,181 in the NASDAQ. What else do we have? The Dow. Okay, Dow's a little bit different because it put up an expanded flat second wave. So we have a 1, or you could call it an A, and then we have an A up, a B down, which goes below the low of wave 1, or the beginning of wave A, and then the C up, which goes above the high of wave A. That's an expanded flat. A up, B down, C up. And that high was on December 13th, and you can see we got a 1 down and a 2 up, and same parameters there. There's our wave 3 targets, the bigger degree of trend, 1 in the parentheses, 2 in parentheses. There's the wave 3 targets. In the Dow, what else do we have here? Bond market. We talked a lot about it in the last one, so I won't get too involved. This is more of a short-term look at the bond market, U.S. Treasury 10-year yield from that high back in October, okay, 4.33. And you can see we have an A down, a B up, and a C down. I think we had those targets on there. Well, it's in the bigger chart. But anyway, from that C wave low, we've got a 1 up, a 2 down, and 3 equal to 2.618 extension, okay, just above 4, and it's come down from there. This chart is as of Friday, okay, and it's Monday morning now. Not sure what it's doing right now. And there are those wave 4 targets. It should hold above the wave 1 high, okay, so we've got a 1 up, a 2 down, a 3 up, and we're in a 4. By the way, this one here is from the March 2020 low of 0.333%. It went all the way up to 4.335. Okay, that's the highest degree of trend. That makes this a 2 down. There are lower targets here. I think I covered that in the last video. This is more of a short-term view. Okay, so if that was 1 up and it lasted 2 years basically, and this is 2 down, 3 gains equality with 1 at 7.30%, and I think the 1.618 is over 10. So we'll watch this. Of course, we're going to get 5 waves up and 3 waves down as long as the trend is up, and it's been up. Okay, let's see here. We've got the gold market. It remains unchanged. We've got a 5-wave pattern developing from 2015, the year 2015, 1 up, 2 down. Again, 3 equals 2.618. We had a sideways 4 here. Okay, we had a direct hit on that target within 5 points, and now we're getting 5 up. We'll get confirmation the 5 up is in play when it crosses the wave 3 high. Okay, if it doesn't, wave 4 could still go lower. These wave 4 targets here, there is the 50% hit just almost on it. The 618 is at 1510, and the make or break is the wave 1 high. 4 should not go below. The low of 4 should not go below the high of 1, which is 1375. Okay, so that's a big picture look there. Okay, let me see what else we have for you guys here. Okay, let me get into, there's the Qs, a little tighter look at that from the B wave high, August 16. That should look familiar. A 1 down, A up, B down, and a C up, and then we've started a 1, 2, 3, 4. That 4 is getting really close to 1. It can cross over and still be a leading diagonal. We'll have to watch that on the short term. But we've got a 1, 2, and then a 1, 2, 3, 4, 5 for a 3, and then 4 up is in progress now. So let me remove that. There we go. That gives us a little better picture there. Okay, so that's what's going on there. Again, this could overlap and be a leading diagonal for wave 1 of 3 down. We'll watch that. Do we want to get into, I think that was the weekly there that we showed you guys. Okay, and here is the ES, and I left this here because we were showing our monthly subscribers for I don't know how long. It's 3 waves down. The trend is up. We need to see a reversal. 5 waves down. 3 waves down. Higher high. 3 waves down. Higher high. 3 waves down. Higher high. That persisted until February the 2nd, and everything changed. And the direction, the trend, the direction of the trend changed. We started getting 5 waves down. Then we started showing all these direct hits. I cleaned this up a bit. It was really crowded, but again, I've said this before. These retracements. So there's a 993, a 979, a 904, and a 986. That's unheard of. Not to mention the 4.786 retraces that held. Here's a normal 618. But again, a couple direct hits there on that target, on this wave 3 target before that triangle, and on this low here. Okay, and then so from that wave 2 high, we've got a 1 down in parentheses, a 2 up in parentheses, a 3 down in parentheses with a lot of extension or subdivisions in there. So of that, from that 2nd wave high to that 3rd wave low, here are our 4th wave targets. I think I had that in the, I'll get it to the next newsletter. You can see it's already hit the 382 and the 500. There's the 618, and it's just below the wave 1 low in parentheses there. I think I have that on one of these charts here. Let me get to, yeah, we did that pre-market open from Friday. So let me get into the pre-market open this morning. I think we get a little bit more detail there. That went out obviously early this morning. Here was the upside targets were triggered. We had upside and downside, as you remember. Okay, we had the move above 40.2475. There are those Fibonacci targets there. Again, the 786 is above the wave 1 low, but the 618 is just below it. Okay, so that's where the targets are there. Okay, and that's what we were looking for from Friday. That's what we put out in parentheses up here. Okay, and then that 382 was achieved, the 500 was achieved. It was 40.62 pre-market was the high. I think that's about it on that. Okay, so let's take a peek, if we can, at the 10-minute. Yeah, now it's up over 40.74. It looks like 40.78 at 10:10 a.m. Eastern time. Of course, it still could go higher. Okay, so we'll look at that there. Those are, and that should be 40.9825 for that low. Let me get the cursor on it. Yeah, so that wave 1 low is 40.9825. This 4 should stay below there, and there's a 618 just above. It's not the end of the world if it goes above, because this is, in the bigger picture, one down of a 5-wave affair. So it could be a leading diagonal with overlap, 4 overlapping 1. Wouldn't be the end of the world. Again, the bigger picture is the 41.88 high, then the 42.08 high, and then the 43.27 high over there. Okay, that's it for today. Hope you guys had a great weekend, and until next time, take care, everyone.